Bollinger Bands are a technical analysis tool developed by John Bollinger in the 1980s for trading stocks. The bands comprise a volatility indicator that measures the relative high or low of a security's price in relation to previous trades. Volatility is measured using standard deviation, which changes with increases or decreases in volatility. The bands widen when there is a price increase, and narrow when there is a price decrease. Due to their dynamic nature, Bollinger Bands can be applied to the trading of various securities. Bollinger Bands are comprised of three lines: the upper, middle, and lower band. The middle band is a moving average, and its parameters are chosen by the trader. The upper and lower bands are positioned on either side of the moving average band. The trader decides the number of standard deviations they need the volatility indicator set at. The number of standard deviations, in turn, determines the distance between the middle band and the upper and lower bands. The position of these bands provides information on how strong the trend is and the potential high and low price levels that may be expected in the immediate future. Trade double bottom. A double bottom occurs when there is a fall in price, followed by a rise, followed by another fall that is close to the previous low, and finally another rise. To identify a double bottom, look for a price that has touched the lower band and wait to see where the next low occurs. A price that reacts and rises close to the middle band, followed by a second low inside the lower band, suggests that the price is positioned for an upward move. Without the Bollinger Band, the stock could look like it is trending down on the second low, especially if the second low is lower than the first. But with the Bollinger Band, the second low may indicate that the stock could be preparing for an uptrend. The classic Mtop. The classic Mtop is formed by a push to a high, followed by sell-off reaction, and then a test of the previous high. The second high can be higher or lower than the first high. Watching the price behave like this, a trader may wonder if the stock is in a new uptrend, or if it has met its resistance. The Bollinger Band may help to answer this. In a classic Mtop, the first high either touches or is outside of the upper band. The price reacts by dropping close to the middle band, the moving average, and the second high touches inside the upper band. The second high can be higher or lower than the first high. The fact that the second high is within the upper band suggests that it is a lower high on a relative basis. For many traders, this second high signals a sell. 3 pushes to high. A 3 pushes to high top often develops as a leading edge of a longer topping formation. The way it forms is typically like this: the first push creates a new high outside the upper band. The second push makes a new high and touches the upper band. The third push makes a new high, but within the upper band. This scenario may be a reliable indicator of decreasing momentum. With it, you may notice there is also decreasing volume, signaling the starts or the ends of trends. Bollinger Bands can also indicate the end of a strong trend. Strong trends, especially those developing after a breakout of a trading range, will result in an expansion in volatility that will cause the bands to initially move apart. This means that in a strong uptrend, the lower band will actually move downward in the opposite direction of the new trend. When the lower band turns back up, it can be a signal that the move higher might be over, at least for a while. Another interesting use of Bollinger Bands is based on the observation that volatility tends to be mean reverting. Periods of low volatility are generally followed by high volatility and vice versa. Narrow bands indicate a squeeze, which means that volatility is low. But remember, since volatility is mean reverting, the bands will probably expand, signaling a potential for an explosive move. A simple way to spot a squeeze is to identify when the bands are the narrowest they have been for the last 6 months. If you're looking to go long when trading a squeeze, consider placing a buy entry point above the upper band. Once it's executed, you could place an initial stop under the low of the breakout formation or under the lower band. If you're shorting, you could place a short sell entry point below the lower band in the squeeze area and, once it's executed, consider placing your initial stop over the high of the breakout formation or over the upper band. Remember to adjust your stop orders as needed, or consider using a trailing stop designated in either a fixed dollar amount or a fixed percentage. Another method would be to use the parabolic SAR indicator to trail your stop. Finally, to capture longer moves, You could consider exiting when the stock tags the opposite band. Pair with other indicators. Since Bollinger Bands are a pure price indicator, you might want to consider combining them with volume indicators for even more depth and insight. Ultimately, there's no indicator that guarantees you'll always get in at the bottom or out at the top. However, Bollinger Bands, especially when paired with other indicators such as chart pattern recognition tools, can help you make better trading decisions. If you liked the video, please hit the like button and subscribe to the channel. Thank you for watching.